Good afternoon, everyone. This is Chrissy from Solstice ATR. I hope everybody's doing great on a weekend. You can find me on Instagram, Twitter, Discord. We use adaptive algorithm for trading. Past performance doesn't indicate future results, and at the same time, we're not a broker-dealer. If you need to use this material, please look at the website policy, and you can request it from us automatically by giving us a shout out. And if you like this video, give us a thumbs up. As well, you can subscribe for the weekly outlook for free on YouTube. Let's first start by taking a look at this slide, and I want to go in details in it. If you look, I wrote major shift. Could it impact the stock market outcome? We have to take a look at the strategies we use and the investments. If we take a look at the S&P 500 or the NASDAQ, we notice the major players such as Apple, Amazon, Google, Netflix, Tesla. I'm not going to, in Microsoft. I don't want to mention more names. Since the March 2020 and the COVID-19, the demographic of the millennials overtaken the baby boomers. At the same time, on July, the fiscal policy by the Federal Reserve Board had made some major changes regarding how they print money, what they do in order to keep the economy going. On August 2020, the Federal Reserve announced a policy approach. They keep rates low, and they are keeping an eye on inflation. At the same time, the goods are becoming more expensive, such as your gas, going to a grocery store, picking up a loaf of bread, and so on and so forth. We have to be realistic about everything that we do. We have to keep an eye on the short-term accounts that we trade with, and at the same time, the long accounts such as the retirement account outlook should be treated differently than the short-term. We have to be flexible because things can change on a dime these days, and be open-minded about the market, where we can go from here. Can we hedge our positions? Yes. Make sure you do what's best for you and don't be biased to one side. Let's first take a snapshot of every chart that we have. What I did here, I've taken the S&P, NASDAQ, the Russell, and the Dow. I did the monthly expected measured move on a Fibonacci. At the same time, since March of this year, this is the low of March, the May low, the June low, we tested almost the July low, and we reversed and continued higher because we broke out of this channel. The most important thing, the combination of the four instruments such as the NASDAQ and the S&P are continuing higher, while this week the Dow and the small cap retrieved a little bit to the downside. So we're going to break it down one by one by not being biased. And what I want to do is duplicate this fib. We edit the property. We're going to go duplicate the drawing to show you how it looks like on the long term if we shift the 100% back to the zero in relationship. Okay, here we go. In relationship to the 61. Oh, I didn't do it. Okay, let's do it again. Go to the zero line. There we go, and let it go. Almost there. Still not doing what I wanted. Okay, good enough. And we push escape. We know that the double, we almost duplicated the measured move from this low here that we had in October. Then we rallied out of here when we continued here. This is our weekly consolidation on the 4th. Let's now take it down to a daily chart on the small cap to show you how it looks like /RT1. We can see that the monthly expected measured move in the Russell rallied almost 120%, 150%, and eventually this week, after last week's range, fell back in, tried to consolidate, couldn't do it on Monday, and fell further down to the backside of the linear regression channel. We have on the weekly chart stayed above the annual high from beginning of the year. In February, March, where it created it. And we fell into that range. This is our weekly high and low, and this is our weekly fibs from high to low in relationship to the 18 simple moving average and the 50 simple moving average, which is in yellow. Keep an eye on this channel in the 50 in relationship to the 18 in case we reverse back up, or do we continue and break this channel back to the 50 in the small cap, and we're going to go back. You can see where the prior highs were in March 2020, the Russell. Let's now take a look at the Dow Jones Industrial Average, the YM or the DIA. We can see that the consolidation from March till May, then we had the June, then we had the August, September area, October, then we rallied back up. In the last week's range, we fell back in range in a linear regression channel. We tried to look up on Tuesday, unfortunately couldn't do anything. Wednesday, we fell through. We lost the 18 simple moving average and the linear regression up channel that we had between these two Fibonacci's, but we are still holding the midpoint extension between the 38 and the 50, the extension, which is the measured move, the purple, in relationship to the high and low. The 50% doesn't hold this linear regression channel, does not touch the 50 and reverse back to the up channel on the weekly Fibonacci in the Dow. Let's now take a look at that. NQ. Oops, go one more. NQ. We can see that the NASDAQ since March has continued higher. We had a little bit of consolidation in September, October, then we rallied back up. We created a new high, fell back in the week before, week and a half ago. Then we rallied and continued higher in the last 5 days. We had those 5 days. We had a Monday inside there, the Friday's range, but closed right inside that upper close on Friday last week. Then Tuesday took off. We traded inside the range, broke up. Wednesday, we traded inside the upper distribution. We looked up, came back in, but we closed above. Thursday, we rallied higher. Then Friday, we continued. We tested the Thursday's high, but we continued higher and we pushed further up. We are away from the 18 simple moving average in this linear regression up channel. We have to keep an eye if this is the channel that we have between, because we have these 2 points connecting and we have the third one connected. Does it look up to continue to the upside, or does it fall back in to the linear regression channel and the weekly Fibonacci? Trade what the market offers you. Don't be biased, because the NASDAQ does have those companies that we talked about earlier, beginning of the video. Let's now take a look at the ES, which is the S&P 500. We can see since March we continued. We do have this gap which has not been visited since June. Then we continued higher. We reset in September, October. Then we rallied back up in November. And we can see that we consolidated, looked up, came back in, and we consolidated in this range. But we looked above the 4,711.75. We have a clean top and we came back in. Does this mean, are we getting a little bit tired on the S&P? We are in a linear regression channel. We are in an up channel. We can connect these dots here. What we want to do, get a channel here. We go get a line. We connect this one right here. We can connect it to here. This looks very far away. You see how far we are? But we can grab this one to this point here. We have to keep an eye on it in relationship in case we fall back in or not in the S&P 500, because we are away from the 18 SMA. Let's take a look at GC. GC had an inside week and fell a little bit back inside. Is it creating a consolidation before we continue higher? Because these were the 4 tops that we had when we fell down. We couldn't overtake this candle. We retested this area where we fell from. You can see that candle. We tested it right. This is the engulfing candle that took over those couple of days. And we fell further down. We could try to get back up halfway. We fell further. We consolidated in a symmetrical triangle or in a linear regression channel. And eventually we broke out of that triangle. This channel goes back to 6/3/2020 in August of this year. But if I zoom in here, we broke out of this symmetrical triangle, and now we are retesting this area. We have to have an open mind if this area is going to hold, or the 18 simple moving average, or the backside of this channel to take us up, or do we eventually come back and reverse and clear the 1868 or the 1870 to continue higher in gold? Remember, the fear gauge is not there. We have to look at different instruments to keep us in line, such as silver, gold, the VIX, and other stuff. Let's take a look at CL, where crude oil, Now we're going to look at CL. We can see that CL, after the rally, we had almost a triple top. Then eventually, almost like a triple top, and eventually fell down. Does this mean the prices of gas kind of come down on the pump? Possibly. Would the administration, the Biden administration, reopen the pipelines? I doubt it. But we have to keep an open mind if there is a difference between the currency exchanges, such as the dollar, the Aussie dollar, the Japanese dollar, the European dollar, in relationship to the price of crude oil. Because, since the March low, we had the August low, then we broke out in September, October, rallied higher. We fell back into that range. Does this mean this consolidation here, and this one hold us up, and the 116 expected measured move on the Fib, because the time expected move was supposed to be higher, but we couldn't clear the 50 and the 38.2 Fib. We fell through the 61, falling back into the range where the 116, and we are below the 50 simple moving average. We have to keep an eye on this down channel and the consolidation in this area if we find a bounce between the 73, 74, all the way back to 79 area. So that's in crude. Let's now take a look at BTC, Bitcoin /BTC. We can see that Bitcoin has looked above to the 69,000, 67,600. And I said to everybody at 69,000, 68,950, be careful of it in case we fall back in. Everybody looked at me like I was crazy, because if you look at the pattern, if you consider this was a look up, we had this gap, we looked down, we tried to retest it, and we fell further down. We created a cup. This is the handle of it, which is the smaller one. Rallied higher, we made a new high, then eventually we fell back through the 50 expected measured move to the upside. We couldn't get to the 38% and fell through the 61.8. This week is very important that we pay attention to this 50 simple moving average, and at the same time, it's my monthly expected measured move when we shifted everything up, where we were supposed to act as support and resistance. Remember, the 161 is the annual Fibonacci from January and March of from March 23 all the way up to December 31st, 2020. And this is the Fibonacci extension for the annual. We came back on the monthly to test the 50 simple moving average, and we are holding the monthly expected move. Does this mean Bitcoin cannot hold 55,500? We have to be open mind in case we come back and break up. If we fall through and we lose the 50 simple moving average, we have to keep an eye on the weekly Fibonacci Fib extension from the high to the low where it closed, the 23, the 38, the 50, and the 61. And this will line up with the 200 SMA coming up to it, or the 50% Fib extension for the weekly chart. If we reverse, we look for the upside. This channel is no longer valid because this is where we broke up and broke down out of. We can take that wedge out, remove the drawing. We have this channel from here to here, which is a linear regression down channel. You can see it. It's in a, and we have this one here. We can connect it to here to keep an eye if this wedge holds us or not. So I hope this will give you a better idea on BTC. Now we can take a look at a couple of stocks, then we look at a couple of ETFs to finish up the video. We're going to look at Aapl. Remember, the news on Apple came out this week, and they said, hey, they may be in the future looking to create an electric vehicle or a hovercraft. The news is great, but it's still 2025. People, they either buy or sell the news and they react to it. Does this mean Apple can continue higher? This is the monthly expected measured move to the upside, which is the 100% it cleared it. We have to keep an eye on the 38, 50, and 61. If that 150, 159 area doesn't hold it, and we reverse back from the mean, because this is the annual Fibonacci from March 23 till 12/29/2020. We know that the extension is 23. This is the annual high for the year. If we do fall back in, we have to keep an eye on the 154 and 152, very important. But if we continue higher, we look for the extension to the 23, 38, 50, 61, the monthly expected measured move. No bias trade what the charts offer you. Let's take a look at Amazon. We can see Amazon created that W pattern. We were in a down channel. Eventually, it consolidated, created that W, and we eventually broke the annual high. If we put our mouse on it, this is from March 16 till September 2nd, 2020. That was the annual high for the year, last year. We eventually, because we looked above it, fell back in. We tested it a couple of times. You can see it. And every time we tested it, we fell back in. This time we consolidated and broke up. This is our monthly measured move for the month in Amazon. It tested the 38 on the weekly high. I don't have the weekly fib up, but that's okay. Remember, if it cannot get to 50 and 61, it reverses back to the zero and holds the 36, 35, then it continues higher. But if it falls, you have to keep an eye on the annual Fibonacci and the 38.2 fib for the monthly measured move. Let's take a look at now GOOGL. We can see GOOGL created a double top. Keep an open mind where it is, and that's the monthly expected measured move. Let's take a look at NFLX. Netflix is in a similar situation. It created a monthly expected measured move, looked above to the 78.2, missed it, 100% double extension, came back in. Keep an eye on the 670 area as well as the 655. 650 is very mental, and you're holding the 18 simple moving average. And if it breaks the annual Fibonacci, this is your annual fib, this is the extension of it. Does it continue to get to the 50 and 38 and the 61.8 fib on the annual chart, or do we fall back in to the linear regression channel up here? Let's take a look at Tesla. We can see Tesla tried to recover. It's got an advanced decline line, higher target than expected. We can see when it printed it, it told us it's going to go to 1202, but we do have a cloud higher, which is 1600. It does not mean that Tesla can continue. Remember, I'm not a hater of I don't like the product, the car itself. The technology of it is great, but I'm not biased. We have to keep an eye on the 1150. This is very critical area because we still have this gap. We almost came to refill it and U-turned back up on news about electric cars. That's the monthly annual Fibonacci fib from March 18 till December 31st, 2020. Do we keep an eye on it to continue higher or not? Pay attention to what the technicals offer you. And we do have a gap right here, which eventually filled, and this one got filled here, which is no longer valid. I can remove that gap rectangle. We can remove the rectangle on this side, which is filled. We still have this gap and this gap here. I'm not showing the ones at the bottom yet. So that's Tesla. Let's take a look at Boeing. We can see Boeing, it had a nice recovery, broke out of the symmetrical triangle, was trying to look up, and eventually on Friday fell back in. Does this mean Boeing can go back and clear to 220, 225 to continue higher, or does it fall back in the range of the 210 and go deeper? Remember, the structure of the company, it's got good product, but the engineers are running to the ground, and we try, to be not biased, we trade what the things offer us on the charts. Let's take a look at the LMT. We can see it's in a similar situation. It gapped down on the earning report, tried to recover. This week it's been consolidating and baselining. We have to keep an eye on this baseline if it breaks eventually the 50 and the annual Fib right here at 50, or do we fall back in to the measured move, expected move down to the other side? Let's now take a look at a couple of ETFs. XLK, this is the tech sector. You can see it's on an annual high. XLV, that's the biotech, consolidating. Keep an eye on the 50. JNK, it's falling a little bit. This is the Bloomberg High Yield Bond. Take a look at the RSP. I'm just going through them very fast. These are ETF funds that you can use for your retirement account, or look at the different sectors, what they hold, and be able to trade equities and instead of the futures direct. SCHG will do the Schwab growth account. We can see it's on an annual high. If I go conservative SCH dividend yielding account, we can see where it is in relationship to the annual look above, come back in and fall through the 18 SMA. XLF, which is the financial sector, you can see it's falling down. XLE, you can see it fell down. XLF, you can see it fell down too. We're going to look at the IEF, which is the 5, 7, 10-year bonds. You can see where it is in relationship because we're keeping interest rates low. The federal TLT, I'm not going to use the ZN or the ZB for the 20-year or the 10-year. I'm using the ETFs and TBT in relationship to the bond market as well. Last, we can take a look at the VIX, and I want everybody to pay attention to the VIX. Every time it created an annual high or tried to spike up, fell back in. This is the first time I noticed that there's that $14.70 holding it up. I'm not saying that I am biased to the upside and things may change. We have to keep an eye on that upper channel. We have a channel here. You can connect this with this. You can see it. We are in an uptrend. We have to keep an eye on the $20. If we break this gap here, you can see it between here and here. There's a little gap. We're going to go get a box, and I'm going to put it in here. This is very important to everyone to pay attention. We're going to make it go across at the property, and I'm going to take it across all the way to the end of the month so people can see it, because we do have Thanksgiving, correct? We can see it. It's right here. There's a little gap. Edit the property. Hold on. I didn't do it till that left. Oops. This is a very important area for me to pay attention on the VIX. If it ends up losing the $16 area and going back to the 14, there is a possibility of us finding a level where we can start accumulating value in the VIX. I'm not saying to buy it. I'm saying to position yourself, hedge your positions against market volatility if things do change. Remember, this week is going to be a short week. Thursday is Thanksgiving. Friday is only half a day trading. So I wish everybody a great Thanksgiving for their family, loved ones, and everyone. But pay attention to what the technicals offer you. And if I go to the /BX, every month they made a change on the contract. You get a spike and a gap in on the VIX, and it comes back down. You see it? There's a gap. There's a gap. There was one here. There was one here. You see it? There's another gap here. This is the monthly expected measured move. We are holding because due to the gap in each month, this is the gap. It shows you that green solid line. Every time we have a gap, it spikes up, comes back in, spikes up. Does this mean we're going to clear the 22, 23, and we have to keep an eye, open mind on this area, because in the overnight action, this is a gap. This was a gap, no longer valid. It's gone. But I want to go to the 4-hour chart, show you on a 45-day how it usually looks like. You can see that this gap here, this one here happened in the overnight. If I zoom to the left, We can see it that here between the close of the market and the open on the VIX when it fell further down, there's this gap here, and I have it marked. What we can do, we can edit the property and go all the way till 11. We'll do it 11:31. Push OK. There it is. So we can see where that expected gap is already filled. Does it continue or not? We have to pay attention to that level. Or do we fill this area from here back down here because due to the change in the contract? So last, we can take a look at the ES one more time. And I want to do it, break it down on that 45-day. On the ES 45-day, we can see that we've been consolidating, looking at the 11 and the 700 area, 4,700. Every time we looked up, we had a poor high, eventually created a little shoulder, made a cup, little shoulder, fell back in, tested the 46, let's call it 46.68, and eventually U-turned back up. But we had an inside day range all week this week. And in the volume profile, if we go to the style, we go to standard monkey bars, we can see that this range here in the profile has been the POCs and the value developing in this area. We have to keep an eye on the 4,700, on 46.95. It's a very critical area that we pay attention to on Monday. Do we go gap up or do we gap down and continue lower? Trade what the charts offer you. If you like this video, give us a thumbs up. You can subscribe on weekly basis for this for free. It's on YouTube. Check us out. Take care. Over and